Here's the 2025 year-end wrap. Dubai closed with the strongest run in the market's modern history. Sales volumes reached new highs, values raised, and some segments grew much faster than expected. Most importantly, 2025 was not only a faster market, it was a smarter one. Deals kept flowing, yet buyer behavior became more selective, more intentional, and more focused on long-term value. This shift tells us the market is not overheating, it is evolving. Let's look at some Dubai market trends now. The first one, and we're possibly tired of hearing this: record volume and value transactions in real estate. By late 2025, Dubai had already logged a record 197,263 transactions, amassing 624.1 billion in sales value. This is above and beyond 2024's full year data, including December, while we are talking in December in 2025, so only results as of November are in. This was annual. Quarterly sales momentum also stayed strong. Q3 produced 55,300 residential sales, up 17.1% year-on-year. Off-plan peaked at nearly 42,000 units over the first 3 quarters of activity. This scale points to real depth. Apartments drove most volume growth, while villas and prime stock drove value. Now let's look at the second trend, which is price appreciation across segments. Prices continued to rise, but at a more mature and measured pace when compared to 2022 to 2024. Knight Frank reports 2.5% growth in Q3 standalone, while almost a 10% year-on-year growth up to end of 2025 quarter 3. Growth stayed broad-based. However, villas outperformed on pricing and rates. Apartments continued to be on the rise across more stable or emerging neighborhoods. Prime and waterfront districts drove value up high. However, emerging corridors where we saw a lot of launches saw a lot of deal negotiations starting to happen. Prime and waterfront districts held pricing up due to scarcity. However, high launch zones saw some deal negotiations starting to happen. The third trend: rental market dynamics. As a baseline, rents kept rising throughout 2025. This is mainly supported by tight vacancy in core hubs, despite the continued household inflow. CBRE reports confirm leasing demand and pressure across the UAE through Q3 2025. Yield logic stays intact. Stable occupancy plus globally impressive gross yields kept international investors and local investors active. But affordability became a big factor, especially in mid-tier districts, where due to tightened household budgets, rentals saw a cooling off effect. Trend number 4: population and economic growth. Population remained a mega structural driver. By Q1 2025, Dubai had already reached 3.92 million people, adding almost 90,000 people in the first 3 months alone. Towards the end of 2025, we are looking at a 4 million number already, which means that macro support stayed solid. The UAE economy in 2025 grew almost 5.1%, supporting jobs, household formations, and migration. Trend number 5: infrastructure development. 2025 reinforced Dubai's infrastructure-led value story. Case in point, the Dubai Metro Blue Line. At AED 20.5 billion in contract value, 14 stations, 30 kilometers, it marked the next chapter in east-west connectivity. And as we all know, in mature markets, transport-led accessibility continues to reshape pricing patterns. Communities tied to new stations historically outperform those that are away from them as and when these timelines firm up. Trend number 6: sustainability and smart infrastructure. Regulations and regulatory bodies stayed firm, giving a big come and invest signal to investors around the world. Green building standards are mandatory today under Al Safat and Dubai municipality codes. Dubai 2040 kept steering growth towards transit-linked, greener, and more efficient districts. This matters for creating value. New stock aligned with energy and mobility standards is a big differentiator now, especially for institutional investors. Now that we are done with the trends, let's look at the market outlook and the risks associated. The biggest forward risk is supply. Having looked at the market outlook and risks, what are the key takeaways? Here's what 2025 has shown us clearly. 1. Record-breaking sales value and volume. Strong mix of off-plan and ready properties, with off-plan leading the way. However, ready sales follow suit due to rising end-user demand in certain neighborhoods. Resilient price growth across off-plan, resales, both apartments and villas. Rental yields kept Dubai super attractive given a global context. Both buyer diversity and investor confidence are growing the demand base. And it's a growing pipeline which is met by structured demand. So what do these takeaways translate to? Dubai remains a rare global market, offering yield plus upside. Strong occupancy and rental momentum sit alongside ongoing price gains. Demand looks structural, not only speculative. The rise in ready home activity plus record off-plan absorption points to two buyer segments: residents relocating or upgrading, and investors targeting future value. Price appreciation is broad-based. Growth has shown up across villas and apartment segments, primary sales and resale, not only luxury showcases. Resilience held even as supply increased. 2025 showed the market digesting large launch volumes despite a city-wide price reset. This shows that Dubai's global appeal stays intact. In fact, continues to grow. Investor-friendly rules, lifestyle pulls, and policy stability kept capital and residents flowing in. Finally, what are the considerations and what do we need to watch? Number 1, the future supply load in 2026 all the way through 2028. The 2026 handover wave continues to rise. We need to watch it very carefully, district by district. Segmentation and community differences. Yields and price growth go very sharply based on location, unit type, community, and pipeline density. Third, global macro sensitivity. Rates and cross-border capital flows still matter for pacing, even in a demand-led market. In summary, Dubai ends 2025 as a deep, liquid market with broad demand and much clearer discipline. The next phase then is not about speed, but about selection. For serious buyers and investors, this shift is a healthy, evolving one.